Discounting bills is the last chapter of your curriculum. So bills of exchange classified in terms of two. After the date where the date of maturity is counted from the date of drawing a bill. This is the first case. Second case, bills of exchange after slide in which date of maturity is counted from the date of accepting a bill. So this is the second case. So the date on bill becomes due. The date on bill becomes a due is called the nominal rate. Nominal due date. If 3 days added with the nominal due date, that is a grace period. Bill becomes legally due date. Bill becomes legally a due date. So where the next thing is banker discount, that is BD, and banker's gain we call it as BG. So banker's discount is interest on banker's value. Banker discount is equal to interest on banker value, that is A into N into I. Banker's gain is equal to banker's discount minus true discount. You know true discount in the last class we discussed. So subtract these two, you will get that banker's gain. So the discounted value of the bill is equal to bill value minus, this is a bill value. It is not a banker's value, it is a bill value. So this is a bill value minus banker's discount. So the first problem, a bill of 1224 is due for 6 months. Find the difference between true discount and banker's discount at 4% per annum. 4% per annum. So we want to find the true discount as well as banker's discount, then we have to find the difference. So true discount is equal to A into N into Y. That is A into N into Y. Banker's discount is equal to A into N into Y. That is 1224 into, it is given in 6 months. So N will be 6 by 12 into, this is 4%, that is 4 by 100 divided by 1 plus 4 by 100 into 6 by 12. This is equal to 24. Banker's discount is equal to 1224 into 6 by 12 into 4 by 100. This is equal to 24.48. So the difference between these two will be 0.48. Difference between these two will be 0.48. The same way, second question, difference between true discount and banker's discount on the sum due in 4 months at the 3% per annum is 10. Find the amount of the bill. This is equal to, this implied. The difference is given as 10. The difference between true discount and banker's discount is nothing but banker gain. Difference between true discount and banker's discount is said to be banker's gain. This is given as 10. This is given as 10. So 10 is equal to So 10 is equal to A into what is N, 4 by 12 into what is I, 3 by 100, the whole square divided by 1 plus 4 by 12 into 3 by 100. This implies A is equal to 10, 1 lakh 1000. What about third question? The true discount and banker's gain on a bill of exchange due after certain time is rupees 50 and rupees 50 paise. So true discount is 50 and banker's gain is 50 paise. Find the face value of the bill. Face value of the bill is nothing but my A. So to find what is A. So banker's gain is equal to interest on true discount, which I told just now. And this one is this, that is 0.50 is equal to 50 into n into I. So n into I will be equal to 0.01. So banker's discount as per the question it is to be found. Okay. Difference between these two, that is bills of exchange. So difference between banker's gain and this will be equal to 50 plus 50 paise. So this is 50 plus, 50 rupees 50 paise, that is our banker's discount. So 50.50 is equal to interest on banker's value. That is A into interest is 0.01, just now we found. So this implies A is equal to 5050. Just a minute. So question number 4. I didn't save this. Question number 4, you take it as exercise. Question number 4, you take it as exercise. So I completed your syllabus. So 1224 into 6 by 12 into 4 by 100 divided by 1 plus 4 by 100 into 6 by 12, that is equal to 24. Likewise, banker's discount is equal to 1224 into 6 by 12 into 4 by 100, that is equal to 2448. So the difference is 0.48. So the difference between these two is given as difference between banker's discount and true discount. This banker's gain, that is given as 10, that is equal to A into, that is equal to A into 4 by 12 into 3 by 100, the whole square divided by 1 plus 4 by 12 into 3 by 100. This implies A is equal to 1,01,000. The last case is this. So the interest on true discount is nothing but banker's gain, which is equal to A into N into Y. That is 0.50 is equal to 50 into A into, I mean, A is 50 into N into I. Therefore, Ni is equal to 0.50 by 50. Therefore, Ni will be 0.01. So true discount is 50, banker's gain is 55. So 50.55. So banker's gain is equal to 50, discount is equal to 50.55 is equal to interest on this will be A into N into I. So Ni will be equal to that is equal to 50. Suppose if you want to solve this problem, the bill of exchange the bill of exchange drawn on 5/1/2013 for 2000 rupees payable at 3 months. 3 months was accepted the same date and discounted on 14/1/13 at 4% per annum payable. Find the amount of discount. So we have to catch how many days it is existing. 14th January to 8th April, because 3 months they are accepted. If they accept 3 months, then it should be started with the unexpired date. Unexpired date is this. Unexpired number of days. How many days this discount existed? 14th January 13 to 8th April. So 17 17 days in January. We are converting into days. 17 days in January plus 28 days in February plus 31 days in March plus 8 days in April. This is equal to 84, excluding 14.1. Because interest can be calculated from the next day. Also, 2013 is not an leap year. So, what is a banker's discount? We want to find the amount of discount here. First, what is a banker's discount? 2000 bill of exchange drawn on. That is amount 2000 into how many days we kept. In 365 days, it is kept for 84 days. These days are unexpired there. The interests are calculated at 4%. So we get 18.41 after reduction. This is after reduction. Hence a required discount. Hence a required discount will be 18.41. What is a drawn period? The drawn period is 5/1/13. I mean, this one. Nominally due on 5/4 after 3 months. What is a grace period? In the above, I said it is 3 days. So this is my 8. This is legally due. So the amount of discount is 18.41. Have you understood?
Yes, sir.
So you take this question as a homework. The same way we can solve this. The similar way you can solve this. First to find what is the banker's discount using A into N into Y. Then 0.64 as per the question. You will get banker's discount as 0.64. Banker value is 100. So we want to find for 603.60 what is the value of this, that is gain. So banker's gain is equal to this. A is 100 by 0.64 into 603.60, that is equal to 0. So what is banker's gain? Substitute these data and find what is a banker's gain. Now I go to discount. So far I completed your syllabus. So your syllabus is over. So this is your extension of the present value in the discounted cash flow, which will be very useful in financial management. Very much useful in financial management. So discounted cash flow, it is to calculate and interpret the net present value and internal rate of return of an investment. So discounted cash flow, where are we using net present value and internal rate of return of an investment. So investment analysis is classified in terms of two transactions. One is present value cash flow, another one is future value cash flow. That is what we discussed in the last chapter. Here we are going to study the net present value and internal rate of return, which will be very useful in financial management when you come to CA, inter or final or any CMA, CPA, whatever course you take. So what I want to master here, time value of money or discounted cash flow analysis, that is a present value, annuity. So where are we using this? Equity. Second one is discounted cash flow analysis, where it is in equity, fixed income, derivative analysis, NPV, net present value, and then internal rate of return. So for evaluating the cash flow, streams, portfolio return investments, portfolio return measurements, money market is investment management. This investment management is a very big tool if you come to industry. So capital budgeting, that is the first one. It is used in corporate finance and security analysis. That is, what is capital budgeting? Allocation of the fund to relatively long range project or investment. Capital structure is a choice of long-term financing for investment in the company. Capital structure is a choice of long-term financing for investment in the company. Working capital management is a management of the company short-term asset, that is inventory, and short-term liability, that is money is owned by the supplier, owned to supplier. So these are the three phenomena you should know. So the first is, here we are going to study net present value, internal rate of return. For evaluating this net present value, internal rate of return, we need to know all the four. One is cash flow streams, second one is portfolio return management, market money yields, and then investment management. The first case is capital budgeting, where it is being used in corporate finance and security analysis. What is capital budgeting? It is an allocation of the funds to relatively long range project or investments. Next, capital structure is our choice of long-term financing for investment. The company wants to make. And working capital management is management of the company used in short-term asset, that is your inventory, stock, and short-term liabilities. So steps for computing net present value. Identify all cash flows associated with investment. That is all inflow, outflow. Find appropriate discount rate, that is a present value or an opportunity cost for investing in the project. Using discounting rate, that is present value, annuity, find the present value of each cash flow. That is, if inflow is increasing, net present value is increases. If outflow is negative, then net present value will come down. So the discounted cash flow imply the weighted average of the capital. Discounted cash flow is nothing but the weighted average cost of capital. Sum of all present value of cash flow, that is inflow or outflow, is called investment. It's called net present value. So if investor should undertake, means net present value is positive. This investor should not undertake, means net present value is negative. So these are the standard phenomena you should know before getting into these problems. So I just solve one or two questions. So the net present rule, net present value of an investment, it estimates opportunity cost of capital as a discount rate. Net present value estimates an opportunity cost. Opportunity cost means already told what is this opportunity cost. In the capital, we are computing this opportunity cost as a discount rate. Is an alternate return that investor forego in undertaking this investment. As I said, net present value is positive, so investment adds, that is greater than the opportunity cost of capital need to undertake. If net present value is negative, then shareholders' wealth will decline. If NPV is plus, then shareholder wealth will increase. So remember these adjustments. We will do some problems. This formula we have learned in present value annuity, that is A divided by 1 plus I the whole power n. So this A is acting as a class cash flow. This A is acting as a cash flow. CF0, CF1, CF2. So CFT, it is an average cash flow. This is why I said in the last page. Where it is. Discounted cash flow is a weighted average of cost of capital. So expected means average. Average cash flow at a time t. N is a investment projected life. For what extent we are going for the investment. I is a discount rate or opportunity cost of capital. So it is something like you are not a loss. It is something we are discounting those opportunity cost. For an example, if a person takes a loan, assuming a person who takes a postpaid connection in Airtel, so whether you use it or not, you have to pay that full amount in a month. If it is being done for postpaid. Suppose a person he has not taken care about that postpaid, he has given up for 10 or 1 year. Suddenly the notice will issued, you have to pay, say for example 4,000 and odd with the penalty. The notice will be issued to the concern. So what this person will go and they will go and talk to the concern, they will reduce this cost because it has not used. If you could have optimized or utilized the GB which is given to you in a postpaid, it would be optimal. You have not used, also you have to pay for it. So how do you discount it? They will discount this opportunity cost, say for example in the place of 4,000.
Sir, screen move ஆக மாட்டேங்குது sir.
Now I did not move because can you able to see the writing? Can you able to see this writing?
Yes, sir.
Yes, sir.
Screen will not move. For time being, I just explain this example because it is not in your curriculum, but still, have you understood what I tried to mean? You have to pay a bill amount of 4,000 rupees, but you will go and bargain or discount this opportunity loss. Say I will pay 50% of money, 50% of money can be paid off. Am I right? Can you able to understand what I am trying to say?
Sir.
Yes, sir.
So it is an alternate return rate that investors are forego in undertaking an investment. It is just a simple example like that. If you start industry, you just see if whether I use it or not, I have to pay for it. So that is a corporate. That is a corporate culture. So the first problem, initial outlay. The first problem, initial outlay will be CF0, that is rupees 2 million requires. Rupees 2 million requires a CF1, that is the next year. Rupees 50 million, I mean 0.50 million at the end of the first year, 0.75 at the end of the second year, 1.35 at the end of the third year. This is the investment generate the net positive cash flow. It is a net positive cash flow for the first, second, third and third year. At 10% discount rate, find the net present value. Can we accept this proposal? Initial outlay will be 2 million. It requires. It generates the investment 50 million, 75 million, 1.35 million at end of first, second, third year. Discount rate is 10% rate. NPV is to be computed. Also, we have to see whether can we accept this proposal. Let us see if net present value is negative, ignore. If net present value is positive, you can consider. So what is the net present value? It is minus 2 million because it is an outflow. It requires means initial outlay is 2 million. So that is why I put minus 2. First year, it is 0.5 million. What is the discount rate? The second year, what is the investment, because the formula for CF naught is this. Sorry, NPV is this. 0.75 into 1 plus 10 by 100 the whole square. The third year, it is 1.35 divided by 1 plus 10 by 100 the whole cube. That is equal to 0.088655. Since net present value is positive, accept the proposal. Have you understood? See, you have given $2 million. Initially, you invest $2 million. That is my capital. This capital generates first year cash flow of my investment is 0.5 million. Second year cash flow will be 0.75 million. Third year cash flow will be 1.35 million. So I am computing the weighted average, weighted cash flow where I get 0.08865. Therefore, it is positive. Had it been negative, I would have dropped. Have you understood?
Yes, sir.
This is my capital. This is my capital investment. Every year I am getting return on investment 0.50 at first year, 0.75 in the second year, 1.35 in the third year. We are computing the weighted cash flow average. That is my net present value or discounted rate. This is what I said here. Discounted cash flow is said to be weighted average cost of capital. This is what we are trying to compute here. Problem number 2. Don't worry, this kind of question will not come to exam. It will be very useful if you do CA final, CA inter, or if you come to BCom final year, you will learn this in financial management. Measuring research and development program current year using net present value. Management has announced that intent to invest 1 million in RD, research and development. Incremental cash flow for forecasted to be 1,50,000 per year in perpetuity. What is perpetuity? Indefinitely we are investing. We don't know what is an upper bound. The opportunity cost of capital discounted rate is 10%. State whether the program will benefit the shareholder by NPV rule. Also evaluate whether your answer to part 1 change if opportunity cost of capital is 15% rather than 10%. So what is the investment capital? $1 million they are investing in the research and development. What is the cash flow forecasted in a year? 1,50,000 rupees they are telling you will get it. In a perpetuity. In a perpetuity means indefinite cash flow. In fact, inflow. The opportunity cost of capital will be 10% in my investment. So state whether the program will be benefited by the shareholder by NPV rule. I mean, net present value we have to use, we have to answer through this net present value, but can it be recommended? Also, we want to tell if opportunity cost of capital is changed to 15% instead of 10%, what is the impact? So what is the first year, what is the CF naught? 1 million you invest, this is my outflow. What is the first year income? 1,50,000 at what rate the interest is calculated? 10%. Because it is perpetuity. Perpetuity formula is A by I. Do you remember? Yesterday only I took. Can you able to understand what I am trying to mean? This A is acting as CF, that is cash flow. I is acting as your discounting rate. Respond me, have you understood? Are you all here or elsewhere?
Yes, sir.
This is equal to 500, 5 lakh. So there is no negative. It will benefit the shareholders because NPV is positive. That is the first thing. The program can be recommended because NPV is positive. In the second case, why did I take CF by I? Why did I take here 1 plus 10%? Do you able to understand the difference? Why this is 1 plus 10 by 100 the whole square, etc. Why did I take like this? Do you able to understand the difference?
Sir.
Because your return on investment is perpetuity. Your return on investment is in perpetuity, it's an infinite. That is why it has become A by I. Have you understood?
Sir.
No response. So this is minus 1 lakh is my investment. I want to check if it is a 15%, will it be profitable? It is a break even. Because answer is 0. So when NPV is 0, the company becomes larger, but shareholder wealth does not increase because cash flow to compensate the shareholders for opportunity cost of making the investment. So this 15% growth, it will not increase the share values wealth. If I change the discounting rate from 10 to 15%, to be able to understand.
Yes, sir.
Yes, sir.
இந்த மாதிரி क्वेश्चंस எல்லாம் எடுக்கவே வேண்டாம். ஏன் எடுத்துட்டு அப்படின்னாக்க one should not ask what is the application of all these mathematics statistics. Now you will come to know shortly. Application of mathematics is this. Statistics shortly I tell you. This is XYZ industry considering a proposal of joint venture. It requires an investment of 13 million. So I am investing 13 million at the end of 5th year. If 5th year last we need to invest 13 million. XYZ joint venture will not buy out interest for 10 million. They are not going to get interest for 10 million. XYZ chief financial officer has estimated that appropriate discount rate is 12%. And cash flows for all the 5 years are given. So 0th year, how much I invested? 13 million. In the 5th year, XYZ will not buy XYZ interest for 10 million. So we want to compute this cash flow, make a recommendation to the CFO concerning whether XYZ should enter the joint venture. Do you able to understand first what is given in the question? XYZ is one industry. It wants to go with a joint venture with some other company. So initial investment is $13 million or 13 million rupee at the end of 5th year. XYZ joint venture will not buy out XYZ interest for 10 million. So the chief financial officer of XYZ estimated the discount rate is 12%. Expected cash flow, average cash flow are given. So we want to compute this NPV. This NPV is minus 13 million plus first year cash flow will be 3 lakh. By what is the discount rate? What is the second year? What is the third year? What is the 4th year? What is the 5th year? So this comes around 17 lakh 93,102.9. Suppose if I go with the future value annuity, what is the future value annuity for all the 4 years? Because this 4 years is that is 3 lakh. This is a two way of doing. Net present value, one is this method, another one is future value annuity, that is 12 by 100 into 1 plus minus 1. I get 143, that is 14,33,000. 14,33,000. $7,983.999. One step is it's not in the okay. This is net present value will be minus 13 million. Minus 13 million plus for 4 years, how much do you get? 1 crore for 43 lakh. 1 crore, 43 lakhs, 37,983.99. Plus last year is your 10,000 divided by the interest rate is computed separately for this. That is 1.672, that is 1 plus 12 by 100 the whole power 5, which is equal to 19 lakhs 5,520.87. This is the answer. So both your NPV are positive. So we can accept the project. Both NPV is positive, we can accept this project. One way of doing is this. This is another way of doing using future value annuity. Have you understood? Future value annuity I computed for uniform cash flow. That is equal cash flow is used for first to fourth year. This is the investment subtract. For fifth year you compute interest rate separately. Otherwise this is a direct formula. This is a direct formula. Whichever method you want, you use. In both the cases your NPV is positive. Is this clear?
Yes, sir.
The next one is internal rate of return. So far we computed net present value. Now we are going to concentrate on internal rate of return. First, what is internal rate of return? It is a present value of investment cost that is equal to present value of investment benefit. Investment cost is outflow. Investment benefit is said to be inflow. Discount rate that makes present value to 0. So what is internal? It depends only on the cash flow investment, not on external data is required. So NPV will be equal to the same formula. In the place of you become IRR whole power 1, IRR the whole square, etc. the whole power n. So CF naught is my initial investment outflow. CF naught will be equal to minus initial investment. If NPV is greater than 0, IRR, internal rate of return, is more than the opportunity cost. If NPV is equal to 0, IRR is equal to opportunity cost of capital. So these are all important aspects if you start the problem. The first problem is this. The initial investment is 1 million. Program cash flow is 1,50,000 in perpetuity. So A by I. What is IRR? Zero. Why it is 0? Why it is 0? When can you assume 0? When can it be 0?
Sir, when IRR is 1.
Then IRR,
Is 1, sir.
see my initial investment is 1 million minus because it is in negative investment. We are expecting return on investment will be 1,50,000 as a perpetuity. That is why it has become IRR. It has to be found. So we want to find this IRR. If your net present value is equal to 0, means IRR will be equal to opportunity cost. Am I right? CF naught will be equal to initial investment.
Okay, sir. Okay, sir.
So what is IRR now? If you bring it to that side, then IRR will be equal to
50,000.
so what is the discounting rate? That is the next question. Sorry, write the equation. So this is the equation. We wrote the equation. The equation is this: 1,50,000 divided by IRR is equal to, what is IRR formula? IRR is equal to opportunity cost of capital. That is discounting factor is also there. So 1,50,000 is my discount. I mean, it is my return divided by how much? Cross multiply. That is a discounting factor. Just cross multiply the above equation, you will get what is IRR. The first question we want to write down the equation. In the second question we want to find what is IRR. That is 0.15 or 15% is a discount rate when NPV is 0. So what this internal rate of return tells us, the program can be rejected. When can you reject this program? If opportunity cost is more than 15. So you cannot reject this. When can we accept this program? When opportunity cost or loss is less than 15%. Neither increase nor decrease. Then opportunity cost is equal to 15%. Opportunity cost is equal to 15%. Therefore, the shareholders' wealth, it may increase or decrease. It is a break even. Do you able to understand? If it is equal to 15%, it is a break even. So what is the next problem? IRR and NPV. XYZ Limited considering whether to open or not the new factory to produce a capacitor in cell phone. Factory require investment on 1,000 million. So a minus. The investment is in negative. Factory expected to generate the cash flow 294.8 million per year for the next 5 years. Financial report says cost of capital for this type is 11% discounting rate. Find the project will benefit XYZ shareholders using NPV as well as IRR. So first let us use NPV rule. So NPV rule, you know, it is minus investment. What is the minus investment? Minus 1,000 million they invest. It is A by I into 1 plus this formula is nothing but future, present value annuity, am I right? PVA. That is 294.8 divided by I into 1 minus 1 plus 11% the whole power 5, because this is the return which I expect after 5 years. The expected generated cash flow will be this. This is a present value annuity. Do you remember? This is my present value annuity. Do you remember?
Yes, sir.
So that is 89.55. This kind of problem will be expected in CA final or CA inter. So it is benefited. Why? Because NPV is positive. Using IRR mode. Again, investment is minus 1000 plus 2994.8 divided by IRR. That is A by I into 1 minus 1 by 1 plus IRR the whole power 5, because for 5 years this is equal to 0. This is IRR equation. Cross multiply. I mean, bring 1000 here. Because NPV is equal to 0. The last page I said, na, if net present value is 0, then IRR is equal to opportunity cost of capital. If NPV is 0, then IRR is equal to opportunity cost
Opportunity cost.
of capital. So using this phenomenon, by IRR, the whole power 5. So what is internal rate of return? If I simplify, I get 14.50. What it says, your IRR is greater than 11% because the project will benefit when. What is the cost of capital? Is greater than 11%. In both the cases, project is accepted. Have you all understood?
Yes,
Now,
sir.
another important question for your CA final. They may ask you to compute the net present value of the project. Initial investment is 5,000. It generates the same what I discussed in this problem. Do you remember? The first problem, whatever I discussed, we are going to do the same. But this is in this horizontal base, now it is in the vertical column. Calculate the net present value for the project with initial cost of rupees 5,000. Generates first, second, third year, fourth year lifetime. And the discounting rate is also calculated. What is the present value? So this is the inflow for the first year, second year, third year. I invest 5,000, which generates the cash inflow for the first year, second year, third year, fourth year, fifth year, which is given. Also, we are finding the discounting factor for 10%. This is the formula for discounting, 1 by 1 plus I the whole power, and that is the present value of the cash flow. So what is a first year? 1 by 1 plus 0.01, the whole power 1, whole square for second year, whole cube for the third year. Now we have to multiply these two. What is the present value? So these are all given to us. These things we computed. These things we computed. This is given to us. First year will be 1,800 into 0.09. That is 1,636. Second year, 1,600 into 3rd year. Fourth year. Fifth year. So the total present value will be 5420. So we want to calculate NPV. NPV is equal to present value minus investment. What is the present value? 5420 minus, so 420 rupees. Sorry, 54. This is 450. Have you understood?
Yes, sir. சார் அப்ப வந்து இப்போ இன்வெஸ்ட்மென்ட்னு கொடுக்கலனா ப்ராடக்ட்ஸ் வந்து ஐ மீன் ப்ராஜெக்ட் இனிஷியலி காஸ்ட வந்து இன்வெஸ்ட்மென்ட்னு எடுத்துக்கணும் இல்லையா சார்?
ஆமா, அதான் இங்கேயும்
எஸ் சார்.
the same. If you look at 50%, XYZ is considering three proposed investment ABC, each requires 4,900, each requires the investment of 4,900, each has an economic life of 3 years. The total cash inflow over the period of rupees is 6,000. The pattern for each proposal differs as below. Calculate NPV of each proposal if the required rate of return is 10%. So we want to, the last column it is for only one XYZ. Now we are classifying in terms of ABC. That is the difference. So how do you interpret the present value? Inflow into this. For all the three we want to compute. That is the difference. But rest is same. Now shall I start this? Present value will be 909. I mean multiply these two. Multiply these two, you get this one. What is the total? What is the cash inflow? As he said, every investment requires 4,100. Net present value is minus 86. So this is a loss. Ignore. For the second case, I mean this into multiply. So 4,900, this is positive, accept. So of the three, which is maximum, then we will propose that investment. For an example, this one, multiply. If I multiply, what is the answer? Have you understood?
Yes,
So
sir.
what's the answer for C is maximum. Answer for C, net present value of C is maximum. That is 213. So propose C. The same way, we are going to do expected monetary value using Iller's and Hertz method, Hertz model. This will be very useful when you come to CA final or any MBA. So for Iller's and Hertz model, the net present value of mean of the net present value, variance of the net present value, this is a formula. Where MK is a mean, average cash flow, expected cash flow. Sigma K square will be variance of cash flow. N is a time period, I is a discounting rate. For the year 1 and 2, 3, like a last model, we have to multiply expected value X into P of X. So I just telling you the application of a statistics, mathematics all together in your financial management. Can you able to understand? So the first year is 2. First year cash flow whose chance is 10%. second year, third year, fourth year. That is why it is listed like this. The same way for second year, for the third year, it is given. What I want to compute now, compute the expected monetary value EMV. Also present value of the expected cash flow using 10%. So this is my thing. Okay, what is the first year cash flow? This is 800. First year expected income is 6,000. That is why this is 6,000. What is the second year? It is 400, 1,200. I mean, multiply these two. You add everything, you get. I'm sorry, this is 800. What is the third case? So find the expected cash flow for every year. You take that as an expected value for computing NPV. The last case, what is the expected value for the year 3? Have you not done this in probability of random variable? For the third year, what is the present value? For the first year, second year, third year, everything is given. We have already computed this in last two problems, we will be the same. So what is the present value factor? 6,000 into this, 4,800 into this, 4,200 into this. So 6,000 into 0.909 is equal to is 4,800 into 12,000. Have you understood this? This is the average. We computed the present value of the expected cash flow. First, we found the expected monetary value for all the years. Now I computed the present value of expected cash flow. The same way I need to compute for variance. I have to compute SD. I mean standard deviation. That is this. What is the first year? It is 2,000 minus average, 4,000 minus average, 6,000 minus average, 8,000 minus average. In the same way, 2,000 minus 4,800, 4,000 minus 6,000 minus 8,000 minus. In the same way, last one. X minus X bar, X minus X bar, X minus X bar. This is X1 minus X1 bar, X2 minus X2 bar, X3 minus X1 bar, like that. Please remember the formula. So this is 2,000 minus into probability. That is 10%. Into 20%. 6K minus 6K the whole square into 30%. The last case 8K minus 6K the whole square, that is equal to, into 40%. So what is the total? It is 4 into 10 power how much? 10 power 6. Because 6 zeros will come. Because 3 0 the whole square will be 6 0. In the same way, we have to compute for the second case. What is the second case? 2k minus 4800 into the probability is 20%. This is 4k minus 4800. Fine, this is 4800. This is 3.36 into 10 power 6. If I simplify, if I add, the last case is this. Into what is the probability? 0.30. Second case, 4k minus into 0.40. It is 0.20. If you add everything, you will get 3.56 into 10 power 6. So what is the present value? It is 1 plus I the whole power 2n. Why this is 2n? Because this is the formula. This is the formula. 1 plus I the whole power minus 2n. Bring it to denominator. That is why it is 1 plus 1 by 1 plus I the whole power 2n. That is 1 by 1 plus I is 10%. That is 0.1 the whole power for the first year. It is 0.826. This is for second year. Because when n is equal to 1, n is equal to 2. Then n is equal to 3. What is the standard deviation formula? Sigma into this. So this problem will come in strategic and financial management when you come to CFI. So this is 4 into 10 power 6 into this value. This is 3.6 into 10 power 6 into, which is equal to
2.29.
the last case is so the total. This is my total. Add everything and take a square root. Have you all understood? In the same way, you can take an next problem as a homework. The same problem. Otherwise, I do this problem tomorrow. I completed your syllabus. With this, I wind it up. Tomorrow, I take these two problems.
Okay, sir.
I completed your syllabus. Maximum tomorrow would be your last class. Then on, you have to take care of your thing.
Sir, after that, we don't be having a class, sir.
You don't have a math class.
ஓகே சார்.
Thank you, sir.